What up, folks? Welcome to the Finance Rebel Show. Today's Finance Rebel episode is dedicated towards Wealthy Wednesdays. Y'all know every Wednesday we do the Finance Rebel Show where I answer your money questions live, and today is not going to change. I've been off a couple weeks, been doing some things, but as promised, I won't be gone too long. So today I wanted to talk a little bit about Dave Ramsey. Dave Ramsey's been around, been circulating, but he's been talking about his investment advice. And he's been giving out investment advice, and a lot of people don't like it. I being one of them. But I want to, have an opportunity to talk about it. Let's have a discussion about it. Let's see if there's anything we can learn from it. I'm not really into talking about people. I like to talk about ideas. But Dave is such a compelling individual because he's probably one of the biggest financial gurus, financial literacy advocates, financial education advocates that's out there on the market these days. If that's what you want to call him, I don't know what to call him. He's a radio broadcaster, though, right? I will say this: he has a raving fan base, a raving fan base. So you got to give kudos to that. You got to say, hat tip to that because he's gotten basically the whole American public thinking that he is a financial guru. But the man has never actually been schooled on finance or anything. He is or was a real estate investor, went bankrupt to come back again, reinvent himself, and then do it on radio. And listen, y'all know I love broadcast. I love all that stuff. But I do wonder if his time is coming past. But with all that said, we'll be talking about that today. So as everybody's coming in, I missed you guys. So come on in, show me some love, say hellos, let me know where you're hailing from, and let me know if you have any questions. Because again, today is Wealthy Wednesdays. Y'all know we do that every week, 8 p.m. ish, right? Today I got a little delay because I was on with a client. And so, I bring these broadcasts to you all for free, but the clients keep the money and the bacon on the table. So I got to take care of the clients first. Got to take care of the clients first. But I might be late, but I'll be here. Rest assured. Rest assured. So let's see here. Let's see here. Let me share this out to a couple of places. Uh, let's see here. Because this is actually my first day back. I'm testing out some new equipment. And so give me a chance to share this out across the socials and all of that. But as I said, as everybody comes in, join our live broadcast, come on in, check in. Let me know who you are. Let me know where you're hailing from. And let me know if you have any financial questions. And do me a favor. Do me a favor. Share this out with a friend or two, somebody who knows or wants to know about investments and has questions about the whole process. So let's see here. I'm trying to share this out. Y'all know every time I try to share this out, I have issues. So there we go. All right, there we go. Now I can share it out. Now we cooking. Now we are cooking. So where are we at? Where are we at? I see a couple people checking in on the chat. Give me a second and we will officially get the show going live. Get the party started. Let's see. Let's see. Let's see. All righty. There's one. Let's see, we got a couple folks here. All right, Ace Thunder. How are you? Welcome, welcome, welcome. I missed you guys. Hey, Monica. How are you? How you been? Looks like folks are starting to come into the room. Did you guys miss me? Did you miss me? Now, I got some new equipment. I'm testing out a couple things, so just bear with me today. I'm getting a whole bunch of stuff, wanting to make these sessions a lot better, a lot more interactive, a lot more fun, a lot more lively. So you're going to see some changes. You're going to definitely see some changes. But again, it's Wealthy Wednesday. So again, let me know if you have any questions, comments, or concerns. I'm only going to talk about one thing today. And again, that is Dave Ramsey and his investment advice. I wonder if it's effective. I wonder if it's even needed sometimes. But I guess I'm giving it away just a little bit. But I wanted to talk about it because I know a lot of people, a lot of times, love Mr. Ramsey, love what he's doing, love everything he stands for, but don't really have a full firm grasp and concept of what he's done. Now, there are some things that I think he has done in terms of getting people on their baby steps, some of their baby steps, right? However, there's some things that are just, in my opinion, full on irresponsible, but he doesn't care. All right, so I see we got a couple more folks. Not sure who that is. Oh, Thunder, say you missed me. I missed you too. Pocket watching with JT. Mr. JT, where you at now? 40,000, 42,000. JT, you want to come on my new podcast, man? Waiting for that invite. Waiting for that scheduling, rather. Stephanie Jones, how are you? Welcome, welcome, welcome. So, I think some of his stuff is a little sketchy, but what are you going to do? What are you going to do? The best thing you can do best thing I can do is keep working. That's all I can do. All I can do. Marv Murphy, thank you for the like. Do me a favor, y'all. If you enjoy these, give me a like, give me a share. All right, my man JT's coming on the podcast. Appreciate y'all. Now I got a secret podcast that I'm launching. It's something I've been wanting to do, and it's not for everybody. Oh, okay. I'm sorry. I said 40,000. Let me get the math right. 42,000. Shout out to JT for hitting 42,000 over on YouTube. He's absolutely killing the game. JT, I think you haven't even been on YouTube a year, and he's destroying it. So that's dope. Congratulations, sir. Congratulations. Now, some of these, I can't wait to talk to you about some of these episodes now. I want to talk to you about some of these, but I will say this: what I do appreciate about JT is that he brings facts. So you can't be mad at that because that's what it's all about. Can't be mad about that. Don Johnson. What's up, Don? How you been, sir? How are you? How are you? How are you? All right. So today, folks, we're getting ready to get going. I'm just I'm getting some of my stuff up to par. Again, I got some new equipment, y'all. Got some new equipment. And I have to log into all of my new spots. Oh boy. And then by logging into all my new spots, I have to get all the email and text message notifications. So just bear with me, two shakes. And I see Thunder has chimed in on the baby steps. JT Coins is in the building. What's up, sir? How are you? How are you? Can everybody hear me okay? Again, I'm using some new equipment, so I'm feeling a little off kilter, but I'm all right. But just let me know if y'all can hear me. Put a one in the chat if you can hear me. All right, so Thunder says baby steps, I believe, are effective. You pretty much nick away at the debt until it's gone and then use the funds to make an emergency fund, then use the same funds to invest in slow, methodically. Okay. All right. We're not going to get into baby steps today, but I'm going to be talking about baby steps. I'm going to be talking about baby steps. Dwight Simmons is in the building. Got a 1 from him. What's up, Dwight? Hey, Angela. How you doing? All right. Coming in loud and clear. All right. Cool. Cool. All right. So let's get this party started, y'all. Let's get this party started. So again, you're all watching the Finance Rebel Show. I'm Kamari Ellis. Y'all know I come here every week and talk to you about money. My whole aim, my whole goal here is to help increase the Black community understanding of financial IQ, or basically help raise the financial IQs in the Black community, because oftentimes we get into situations with money and we make poor decisions, misinformed decisions, ill-advised decisions, oftentimes because we got some information from Ray and them, and it's wrong. It's inaccurate. It's baseless. It has no foundation, no financial backing whatsoever. And I've seen so many people be hurt by this. So every week I come here, answer your questions live, bring information, gospel, to have a better life financially, because again, everything in your life comes back to a dollar. Now, I do not believe that your money should run your life. Money does not make you happy, but having a better understanding of money can definitely make your life better. All right, can definitely make your life better. So let's see here. All right, I think we finally got it going. All the logins are working. All the stuff's checking in. They're allowing me in. And again, we're going to talk about Dave Ramsey. We're going to talk about Dave Ramsey's investment advice. Is Dave Ramsey's investment advice still effective? Was it ever effective? Right? And then at some point, I will start talking. I will do another broadcast talking about baby steps, because I do think there's a conversation that should be had about a lot of the stuff. I got some smoke for a lot of these folks. I can't do a full JT, but there's some shenanigans that are going on that are really, really bad and that are really, really hurting folks. Even though some days I really would like to be JT. So, all right, let's check this out. All right, the Whites. Yes, sir. How are you? The White, what you reading these days, man? You got some reverb? Is it a big reverb, a lot of echo, or a little bit? Let me know. Is that happening for everybody? Is everybody getting reverb or echo? All right, well, let's get this party started. So, Dave Ramsey. Is Dave Ramsey's investment advice effective? All right, again, I'm Kamari Ellis. I'm the founder of the Philly Tax Team. Many of y'all know me as the Finance Rebel. All right, every week I do these broadcasts. This is part of the Finance Rebel Show, again, to help raise the financial education in the community. And today we're going to talk about, is Dave Ramsey's investment advice effective? Now, Dave's been around for a long time, has built an illustrious radio career, was a previous or still current real estate investor, real estate advisor, or whatever you want to call him. But from my understanding, and somebody correct me if I'm wrong, he never actually got any real financial education, no licensing, no nothing. He just basically talks about his personal experiences and then gives advice on radio to millions and millions of people about his experiences, which is cool, right? But key point here, personal finance is personal. Again, I want to say it again. Personal finance is personal. So what works for you may not work for someone else. And what works for someone else may not work for you. All right. So I want you to all keep that in mind. We all have different experiences, different education, right? Different outlooks on life. And you have to factor all those things in. So sometimes you could have two people with the same ingredients, bake the same cake, do the same measurements, and get a totally different cake when they're done the baking process. Same thing with life, same thing with money. Okay, you have to keep that in mind. So Mr. Ramsey went out and posted this: how to invest your money. Now, a lot of folks have talked about this, but I've been wanting to talk about this for a minute, just haven't had a chance to get to it. So he said, how to invest your money. Invest in mutual funds, spread equally in 4 categories: growth, growth and income, aggressive growth, international, right? Next category or next asset class is real estate, paid in full. Everybody knows Mr. Ramsey does not like that. Now, I have mixed emotions about that. Again, personal finance is personal. I agree with him sometimes, and sometimes I do not. As it says, because he wants you to buy real estate in cash, no mortgage, no debt, no loan, no liabilities, nothing, full cash. Now, depending upon who you're with, depending upon how you rock, that could be good and or bad, right? Again, everything is subjective. Everything is subjective. Okay. Now, he said, don't invest in these things, single stocks, Bitcoin, or any currency. Now, y'all know anybody say something about some Bitcoin and crypto, you got a bunch of people outside screaming. Whole life insurance policies, annuities, bonds, micro investings, REITs, ETFs, and CDs. CDs are also known as certificates of deposit. And a lot of times in my industry, we call them certificates of death. But those are just a few of the things that Mr. Ramsey does not like, does not endorse, does not want folks investing in. Okay. So let's talk about these things. What is a mutual fund, right? And I want y'all to pay attention to this. What is a mutual fund? All right. We don't need to look at Mr. Ramsey anymore, right? What is a mutual fund? It's a basket or a bucket of investments. You can have mutual funds that invest in stocks, United States stocks, stocks in China, stocks in real estate, right? He said only invest in real estate though with cash. You can go after a lot of those things. Real estate. Let me pull that back up. I got too quick. Right? So he's fine with that, right? So when you think about mutual funds, though, where are they? It's the stock market, but he says don't invest in stocks. But mutual funds largely, not all the time, but largely invest in stocks. They also invest in bonds. We got some things that invest in international as well. So those four asset classes, the growth and income, aggressive growth, those are all like Morningstar designations. They talk about a growth, right? A stock that's in a growth phase, what's in a growing phase. And then you have growth and income, just to break those down just a little bit, right? Growth and income are stocks that, one, are still growing, but two, stocks that are paying a dividend or generating some kind of income. Then you have aggressive growth. Those are your stocks that are not just growing, but they are aggressively growing. One that comes to mind over the last couple of years would be a Tesla. You would label Tesla an aggressive growth company. A growth and income company you would classify might be, trying to think who's paying a dividend right now. So help me out, y'all. Just give me somebody who might be paying a dividend right now. I want to say Ford. Well, Ford's actually reinstating their dividend. Right, so that's one. They stopped paying their dividend because of COVID, but they're reinstating their dividend now. And Ford's growing. I wouldn't say they're aggressively growing over the trend line over the last 5 years, but I'll say they're growing. Okay, and international. So a Nestle might be considered an international, will be labeled international. And then real estate, said paid for in full. So he's talking about your typical bricks and mortar real estate that you own outright, not owned through the stock market, because you can own real estate through the stock market, through REITs, which are on his list to not touch, and various other avenues as well. By the way, REIT stands for Real Estate Investment Trust. Real Estate Investment Trust. Okay. So he doesn't like, thank you, Jerome. Coke would be, that's a great one. Coke would be a good growth-ish income company because they pay a dividend. All right. So, just keep all that in mind and believe I'm coming to a point with all of this. All right. So real estate. Now, don't invest in single stocks. Now, single stocks are largely a lot of times where they're in mutual funds. Now, I want to go to the bottom of the list as well because he said ETFs. ETFs stand for exchange traded funds. Exchange traded funds. What's an exchange traded fund? Now, if y'all been rocking with me for a minute, y'all should be able to repeat my next coming words verbatim. ETFs are a basket of investments, very much like mutual funds, very similar. They're a bucket or basket. You can invest in stocks. You can invest in bonds. You can invest in stocks that are international. You can invest in growth stocks. You can invest in growth and income stocks. You can invest in aggressive growth stocks. You can invest in international stocks. So ETFs are actually the little cousin or little brother or little sister of mutual funds. Mutual funds came out, let's say, back in the 60s and 70s. ETFs started in the 1990s. Okay. ETFs are the more modernized versions of mutual funds. And some regulatory filings, you might find them labeled as the same thing. But there are some differences. There are definitely some differences, right? So mutual funds, typically you can only invest in them or you can only get your values at the beginning and ending of the day. Whereas with ETFs, you're able to get the values throughout the day. That's just one of the functionalities of mutual funds, of how they settle and do everything. You can't trade mutual funds throughout the day. You can trade ETFs throughout the day, very much like regular stock. Okay, so that's a similarity, but they're different, but they're very similar. Like I said, they're cousins, so to speak. But mutual funds tend to usually have a higher fee, right? You got to pay somebody to invest this money. You got to pay somebody to be a steward and look after this money. Mutual funds typically pay or usually charge a higher fee. Guess what? ETFs charge typically a lower fee. That's because of the structure. Okay. Now, just going back to the list, we were on Bitcoin next. Now, y'all know I've been labeled as the anti-Bitcoin guy or Bitcoin hater, which I am not. I just don't look at any asset class as the next coming of Black Jesus. I am asset agnostic. Well, maybe not so much. I do favor stocks over them all, but I see them all as having their place in your portfolio when you're doing it right. Oftentimes, I've gotten labeled being the Bitcoin hater because people will come to me with $40 or $300 and they say, should I invest it all in Bitcoin? But that's all their savings. And I've said no, and people said I'm crazy. But they never talk about the volatility of Bitcoin, right? So it's not that you shouldn't invest in Bitcoin. You have to understand Bitcoin. You have to understand everything that's on your investment list and on your investment menu and not take my advice or not take Mr. Ramsey's advice or anybody else. You need to be doing your research, right? Even if you have a financial advisor, you should be researching what they're doing for you because a financial advisor can be a very great tool, can be used as a very great tool for you. But oftentimes people get taken advantage of because they don't really understand what's going on. All right. And sometimes unscrupulous people, evil people, foul people will take advantage of you. We saw that with Madoff. So I'm a big advocate of doing research. You can never go wrong doing research. Don't get lost in the sauce. Don't get analysis by paralysis or paralysis by analysis, however which way that's said. But you should know what you're buying. You should understand what you're buying. And guess what? If you don't understand it, you shouldn't buy it. Okay. All right. So Bitcoin again, I'm neutral. Blockchain, which is the thing that all crypto runs on, is here to stay. I think Bitcoin's going to be around for a long time too. I think it's pretty safe to say it's going to be around for a long time, right? I don't think it's going out of business, out of out of favor anytime soon. Okay. Whole life insurance policies. Now, I'll be honest, I have a big issue with blanket statements. Now, I've been a financial advisor before, worked as a tax accountant, worked as an institutional portfolio manager. I've seen every one of these investments and stocks being used great in a great way and in a bad way. It's not about the actual investment product or the financial product. It's more about the financial strategy that you're using. So sometimes whole life insurance makes a whole lot of sense. Now, the likes of Mr. Ramsey and the other lady who likes to get on all these platforms and talk about stuff and talk about money, they don't like whole life. It just really depends. It really depends on what's going on with your life, your situation, and your circumstances. Again, personal finance is personal. Okay, so never forget that personal finance is personal. So when folks make these blanket statements like whole life insurance policies are bad, I wonder, do they understand whole life insurance? Right now, I've done a lot of broadcasts and a lot of episodes talking about life insurance. Y'all know I've said before that I believe life insurance is probably one of the greatest financial instruments ever created. Right. But again, people don't really understand it. You got some people who are totally pro whole life. You got some people who are pro um, term insurance. You have some people who are pro universal life. You have some people who are pro variable universal life. And I just named basically the four different basic types of life insurance. But again, they all have different applications. For example, if you are super duper broke, but you want to make sure your family's covered just in case, knock on wood, you don't make it home to see your family tonight, term might be the best thing for you, right? But if you're a high income earner and you've maxed out a lot of things and you're looking for other tax advantage vehicles, whole life insurance might be a good look for you. Maybe. Again, it all depends on what you're doing, right? It all depends on what your situation is. I've, just to touch a personal note, I've been to 3 funerals in the last 30 days. 3. Last 30 days. And every time I sit there, I wonder, well, one, I know one situation they didn't have life insurance. And so the children had to carry the burden. Now, some of the friends also got together and put up some money and things like that. But that's a heck of a burden to put on your child. What if, and I don't know the whole circumstances, right? But what if when they were younger and they were making money, they got some whole life, it accumulated a cash value, a nice cash value, and it was able to survive their whole life, and they were able to keep the policy their whole life. When they retired, they wouldn't have to carry the bill for the burial and the funeral and all the rentals and the flowers and everything else that goes in with taking care of your folks when they go home, when they go to the upper room. But again, we're not looking at it with that level of discernment a lot of times. A lot of times we are only living for today. We got to be able to have a little vision into tomorrow as well. So we have to be careful about that. We got to be careful about that. So, other thing that was on the list was annuities. Annuities is on the list as well. So annuities, what are annuities? Well, annuities are actually life insurance policies. They're issued by life insurance companies. They're contracts for life insurance. They're a little different than straight up life insurance policies, though. A lot of times people put their retirement funds into them because they can get a guaranteed return and guaranteed income over time. Not always the best thing for, let's say, trying to catch up with the stock market, but if you want to put your money in something, you typically don't want to worry about it being taken, um, ran off with like a Madoff, running out of money, being subject to market fluctuations. Annuities can be a good thing for that purpose. But again, you got to understand the purpose. You got to understand the strategy. And a lot of times folks don't have a strategy. A lot of times folks are going off of hearsay. A lot of times folks really are just saying what they think they had a good experience with. But nonetheless, so said don't invest in that. Also said don't invest in bonds. Bonds right now do not look sexy. I'll be honest with you. The 10-year rate the last time I looked was about 1.5%. So if you're not getting much of anything, but bonds have a function. Bonds are kind of like the suspension on a car. It's the suspension on your portfolio. So typically, now we are in crazy times right now, but typically when the market goes crazy, bonds remain consistent. They remain stable. So for example, when your car hits a pothole, it usually bounces back and you're not too jarred or too jerked around. Why? Because you have good suspension. Same thing for your portfolio, right? Because when the stocks are going crazy and they're going all up and down, or when your Bitcoin is going crazy when it's going all up and down, your bonds typically remain constant and steady. They do fluctuate, but not as much as your stock, as your cryptocurrency, as many other things. So you got to keep that in mind. Now, again, annuities can be really good for people who are thinking about retirement or in retirement because they want something safe and stable. All right. Now, micro investing. There's a different couple of terms. There are different terms or definitions for micro investing. Some people call micro investing buying penny stocks. Others call micro investing is investing like directly into a company. I'm not exactly which application Mr. Ramsey meant it in, but again, if it's a small piece of your portfolio, it might not be bad. There's a lot of small bets that make off. Now, y'all know not to be confused, right? I do not like penny stocks. Penny stocks are the spawns of the devil. I just mentioned it just for context. Give me a second. All right, so I want y'all to keep that all in mind, keep that all in context. Micro stock could be you investing $1,000 into your cousin's business. Now, I'm not going to say you're going to make money because sometimes our family pitch us great, wonderful ideas, but are not able to execute on those ideas because they're not tried, true, and tested. They haven't been through enough business situations to really navigate certain situations with investment funds. We've seen this happen a lot with a lot of folks that get online and they talk about their investment. They talk about the rate of return that they're going to promise everybody, and then oftentimes they're not able to do it. So we've seen that. We've seen that, right? But it's not always bad. There are some. There can be some positive outcomes, right? But here's the thing. This man has millions and millions of people. I have never seen him really break down each one of these situations. Honestly, I try not to watch him, but to be honest, I would be lying. I don't think you can really get away from him because he is everywhere on social and on TV. I mean, he really has a cult-like following. So today I wanted to talk about it just a little bit. Now, the last three, again, I talked about ETFs, REITs. I told you what REITs are, right? But I don't think people really understand REITs, right? Because some REITs are publicly traded, some REITs are private. Matter of fact, oh man, I had this old REIT book. Um, it's from a company. I won't say the company name, but this is an old one. But a lot of times REITs have different asset classes. Um, Residential, commercial, lodging, timber, warehouse. I'm trying to think of some of the other ones, but you can do a lot of different things in terms of investing in real estate through REITs. If you want to start your real estate investment career and you might not have the money to do it, or the money to buy the bricks and mortar, you can start on the stock market, right? Oftentimes, a lot of these REITs pay great dividends. Now, I want to warn y'all, some of these REITs, though, are sheep's and wolves clothing. Or excuse me, they're wolves in sheep's clothing, because some of them are actual private prisons. Y'all know I hate private prisons. If you haven't listened to the very first episode of the Finance Rebel podcast show, I talk about the Finance Rebel Creed, and I talk about doing no harm. You cannot intentionally do any harm. And when you knowingly invest in private prisons, you are knowingly doing harm. Why? Because all kinds of atrocious, crazy things happen in those prisons. Everything from rape, murder, robbery, all kinds of things. And a lot of times it's ungoverned. Nobody cares there. So I try to avoid those as much as possible. And a lot of REITs are, again, running around masquerading as REITs, but in actuality, they're private prisons. I hate private prisons, so please stay away from them at all costs. Now, again, nuance matters. Details matters when we're talking about investing, but he does not tend to take the time to go through these things. He'll tell you all about avoiding debt. And I'll be honest, like, some of the credit folks out here in the markets make me sick, because everybody thinks they can get business credit. They can run off with the bag. They don't have to do any work. There's no blood, no sweat, no tears involved with any of their wealth accumulation goals, because they got business credit. Not that they got great revenue, a great business, a great offering, just business credit. Like, that makes me sick. However, the data states that most people can't handle credit. I want to say there's like 1.4 trillion in outstanding revolving credit. I got to go back and check my facts, but there's something like that. So there's something to the madness. Most people don't understand how to truly leverage credit. Now, you can leverage it. You have to be very disciplined with it, though. And just like anything else, it's like driving your car. Do you really want to give the keys to a 13-year-old who think they can drive but have no experience, no education, have no trials, no tribulations, none whatsoever? But, again, but I get the no debt thing, and I said I wasn't going to go too much into the baby steps today, 7 baby steps, but I did want to talk about his investment piece, because, again, I think a lot of people are misled. Again, personal finance is personal. Again, it shows that, in my opinion, he's kind of confused about what's going on in investments. He's promoting investments that came out in the 60s and 70s, where there are new innovations in investments that came out in the 90s that are very prevalent now, very accessible now, and he's trashing them. I find it ironic. I find it very ironic. But I don't know. Maybe he's not staying up to date. Maybe he's not doing his continuing education. Oh, that's right. He doesn't have any securities license or any licenses. So he's not duty bound to do any continuing education, right? He just talks. Now, you can say, well, Kamari, you just talk. Guess what? I do a whole bunch of continuing education. I try to stay as current as possible. There's a lot. Again, JT was here. JT just got a CFP. Shout out to him. He clearly is staying up on his stuff, right? You gotta stay up on the stuff, because the world is ever changing, especially now. We are in a 24-hour news cycle. We are in a 24-hour money cycle. It's never been this chaotic, this crazy before. Things are changing. Everybody's talking about crypto, the blockchain, and NFTs. We just saw that little black girl that was 12 years old run the bag up, millions of dollars. NFTs. She would have never did that if she followed Mr. Ramsey's recipe. So I say all that to say, not to dog Mr. Ramsey, because y'all know I don't really like talking about people. I like talking about concepts, topics. Just be careful who you seek counsel from. Just be careful about who you seek wisdom from, because a lot of people who are quote unquote out here acting like they have wisdom really are just trying to sell you something. And that's just the God's honest truth. They just want to sell you something because they want to get rich quick. They want to make money. And listen, there's nothing wrong with making money at all. But I suggest we all do it ethically, with moral, with some love and compassion for our fellow human beings. So I think we can do that, right? Can we do that, y'all? All right, so that's all I got today about Mr. Ramsey, his investment advice. If anybody has any questions, go ahead and throw them in the chat. Now, y'all know this is Wealthy Wednesdays. This is the Finance Rebel Show. So every Wednesday, I love to come through, check in with y'all, answer your questions. So go ahead and throw any questions you have in the chat. I am broadcasting live on YouTube, Facebook, and Instagram. If you're on IG, hit the bubble. Put your questions in there. If you're on Facebook, Twitter, not Twitter. What am I talking about, y'all? If you are on Facebook or YouTube, just go ahead and throw them in the comments, and we will get at them. So, what y'all got for me? What we talking about? So, question: are any of y'all fans? Are y'all fans of Mr. Ramsey? Do y'all follow his gospel? Are you in the Church of Ramsey? Let's see here. So, all right. So, they've made some changes here on this platform. So let's go through. I know I got a lot of comments here. Let me get to them. Give me 1 second, y'all. Un momento. All right. All right. Give me 1 second. All right. Yes, I'm coming clear. All right. The White said had some reverb. The White, did that ever get resolved? Hopefully so. All right. Julio Lopez says, Yo, Kamari, I'm just finally talked with my bank financial guy to see where I am. Want to invest, and it's a no. I learned much from you guys. By the hood, earn your leisure. Bless you all for educating us. Yes, sir. Yes, sir. Thank you all for stopping in. Thank you all for taking advantage of the stuff that's coming out of By the Hood. Those are my brothers over there. Shout outs to the By the Hood. Shout outs to Earn Your Leisure. They're doing major things. Earn Your Leisure, they're killing the game right now. Brothers are killing the game. So I'm glad you were able to take advantage of some of that information. Now, I'm curious though, you said your bank financial guys, talk with my bank financial guy to see where I am, want to invest, and it's a no. Why does he say no? I'm curious. Why does he say no? All right. Nemesis breaks. All right. From Kansas. All right. Shout out to Kansas. I go to Kansas sometimes. Out in Wichita. Thunder says I just do S&P. All right. That makes sense. All right. Jerome gave me the alley-oop there. He said Coke. That was when I was looking for the dividend stock. Couldn't come to mind real quick. Jose's in the building. What up, Jose? All right. Miss Edith is here. How are you? All right. Jose says, yup. If you can't understand what you're investing in, you shouldn't be investing in it. No, you should not. Even if it's the new hottest thing. Right? All right, JT Coin says, how is Dave Ramsey able to give sound financial advice and be respected as a financial without the education or certificates? I don't know. You tell me. I mean, but listen, I'll be honest. If I could build a radio career like Dave Ramsey, that's truly a testament. Like, he's been doing his thing for a long time. I just don't know if he's been studying that whole time, but people love it. And I mean, it also shows that if you can boil a thing down to very simplistic things, you can do a lot with it. Everything doesn't have to be complicated, and there's nothing complicated about Dave Ramsey stuff. And I will say this just to be fair and objective to Mr. Ramsey. I do believe The first baby step, save $1,000, is an important baby step because most Americans can't survive a $400 emergency. I think that's right. Now, for the record, that's not Dave Ramsey's though. He wasn't the one that came up with it. That was out way before him, way before those 20 years. But vote FYI. I'm not sure what that means, Erica. Break it down for us. Is that a ticker symbol or what are you saying? All right, Jose says no. All right, Julio says no. Talton says getting out of debt advice is decent. Investment advice is trash unless you wouldn't invest otherwise. So I'll say this about getting out of debt. He says, do not invest until you're out of debt. And that is flawed thinking. There are times, I do believe in focus, but there are times that you can walk and chew bubblegum at the same time. Right? So just imagine had you just at the beginning of the pandemic when we had the big crash, big sell-off in February and March, if you were just taking, I don't know, $25, $50 every pack and invested that money into the market. And you could still keep paying down your debt. But what would the rate of return have been? What is the rate of return from last February until now? It's over 100%. And now that's just to be honest, it's not always going to be like that, but you never know when. And so sometimes when you do these things, because the logic, the ideology is that you can invest and get a higher rate of return than your credit cards or whatever your debt interest rates are. But that's not always true. Not to mention that there's an opportunity cost in that. So again, I have major student loans. A lot of people have major student loans. I've showed y'all some of my returns. I can now apply those to some of my student loans, right? Or at least be okay. But again, it just really depends on what you're doing and where you're trying to go with things. All right. Waste management is a great dividend stock. Yes, it is. And we are always going to have waste. Talk about a great business. All right. So JT Coins. All right. JT Coins says, I agree with his advice to pay off debt and have an emergency account. I do not think he has the answers for all situations. Getting a second job is not always the best solution. No, it is not. No, it is not. Hold on. Stephanie says Larry Brickett. I'm not sure who Larry Brickett is. All right. And just real quick, if anybody's just joining me now, my name is Kamari Ellis. I'm the Finance Rebel. You are watching the Finance Rebel Show. Every Wednesday, I do Wealthy Wednesdays, and I come on here and answer your money questions. The whole goal of the Finance Rebel Show is to help increase the financial IQs of those in the community. So again, I try to come here every Wednesday and answer your money questions. I see I got a couple people on the IGs. Oh wow, my son came through. Shout out to Junior's Watching Detail. I always say your name wrong. Credit to Don. How are you? Gemini Poppy, how are you? Q75, how are you? Cabby 333 says, I sell it in a community WWE needed like air. They all serve a purpose. All right. Caring about myself, how are you? Welcome. And Owner Options, how are you? G5 Narcos, how are you? All right, Cabby 333 says, what's up with the metaverse? Help me understand this. I mean, the metaverse has actually been around for a while. It's not brand new. Folks are just taking advantage of it now or starting to rebrand themselves into it. Now, you can buy stuff on the metaverse. Like, I mean, one of the earliest things about the metaverse was like having these avatars, right? Playing games and having these avatars. That's kind of a form of the metaverse. But I mean, it's here. It's not going anywhere. Let's see. I would say I would Google what is the metaverse. I'll do a show on it at some point and to talk about it. But it's where we're going. It's where we are going. It's not going away anytime soon. All right. So Julio says, nah, I said no because he was talking about CDs, bonds, and saying the stock market is not trustworthy. It goes up and down. Shake my head. And I wanted to talk about ETFs and what Ian said to study and invest in. Yeah, I mean, I like Ian. I like Ian a lot. Two tech and two index. That's cool. Um, Tech's not going anywhere, and typically you can't go wrong with investing in an index. I will say this though about the indexes. Sometimes there is an overlap in some of the index. For example, man, so the major indexes are the major ones: your Dow, your S&P, your Nasdaq. Well, in the S&P, Apple's there, and the Nasdaq, Apple's there. I want to say Apple's in the Dow now too, but let me look at the Dow components. I might get that wrong. I might get that wrong because the Dow has changed over a couple times. All right, so I just pulled this up real quick from Guggenheim. Give me 1 second. Give me 1 second. So what's in the Dow, right? Let me take that down. What's in the Dow? United Healthcare, Home Depot, Goldman Sachs, Microsoft. Okay, Microsoft is definitely in all three. It's in the Nasdaq, it's in the S&P 500, and it's in the Dow. Salesforce, McDonald's, Amgen, Boeing, Visa, Honeywell, Caterpillar, 3M, Nike, Apple. Right. So Apple again Apple is in the Dow, Apple is in the Nasdaq, Apple is in the S&P 500. All right. American Express, Johnson and Johnson, J.P. Morgan Chase, Travelers, Procter and Gamble, Walt Disney, Walmart, IBM, Chevron, Merck, Cisco, Coca-Cola, Dow, Intel, Verizon, Walgreens, and I can't pronounce this one, Central, I think that is. So, point being is that it's cool. It's cool, but you got to do what's good for you. And I've been telling y'all, I'm looking at boring stuff, right? So with this new infrastructure bill, there's going to be a lot of boring stuff that's going to make money. So what's boring? Big machinery, typically boring, right? Nobody, nobody wants to talk about Caterpillar, but Caterpillar has been on the move. And as more money comes out, I think you're going to see more things. Ford, infrastructure, electronic vehicles, definitely going to be a thing. It definitely is a thing. Y'all know I've talked about that for a while too. So I suggest everybody, I tell everybody, if you want to start off, you can pick an ETF like SP 500 or SPY or VT or any of those. But I also say invest in what you know. So if you like cars, look at Ford or GM. If you like if you like apparel or working out, look at a Nike. If you like, all right, repeat. Give me 1 second. If you like, if you like, I don't know, if you like food, right? You like to eat out. Look at a Darden. Look at the Yum brands. Okay, so I think that's cool, but I think you should also definitely do your research as well. All right, so give me one question. Okay, now she has four is here. D Hop 112 is here. Being Tamika is here. Welcome, y'all. Happy Wednesday. Repeat with Pete. Repeat with Pete. Come through with a tax question. If you're claiming a home office, can you use the continual portion to write down payment? I'm not sure what you mean by that. And home renovations all done within the same year. So I'm not sure what you mean by continual portion, but you can write out your pro rata portion. I'm not sure that's what you're trying to say, of your exclusive home office, right? So let's say you got 1,000 square foot home and you have a bedroom that you use to do your work in exclusively. You don't have any playpens in there. You don't have any gym equipment in there. It's your office exclusively to do work. And let's say it's 100 square feet. You can write off 10% of your mortgage interest, 10% of your rent, 10%, not all of it, not all, 10% of, again, your mortgage, your rent, your real estate taxes, your utilities, and yes, even sometimes upgrades to your home and other maintenance to your home can be written off as well. You got real specific. That would repeat. If the home utilizes 650 square feet, and it happens to be 1/4 of the total square footage, can you write off a quarter of the down payment used to purchase a home? No, not the down payment. You can write off the mortgage interest. You can write off the real estate taxes. You can write off a quarter of that. So, Porter Digital, how are you? Anniversary Studio, how are you? Shelby CEO, what up, Shelby? All right, so let's get back to some of these other questions. All right, so Jose says, yeah, I'm a earner, big earners in the building. All right, that's what's up. Hold on, I think I missed something. All right, Talton says, Dave Ramsey says no 401k investing until after all consumer debt is gone. That's trash, y'all. I'm sorry. That's trash. Why? 401ks inherently have a great tax benefit off the rip. And if your 401k has a match, you're missing out on free money. Why would you miss out on free money? Let's talk about the rate of return on free money. Can anybody calculate the rate of return on free money? Can anybody do it? Anybody? It's infinite. So again, that's why I don't know what Mr. Ramsey does. I don't know what university he lives in. I don't know what he's studying. Now, I will say this. I have had clients where their budget was so tight, I had them discontinuing putting money into their 401ks temporarily. But as soon as they handled a couple of things and rejiggered some things, I had them immediately go back into it. But that was a dire situation. It's not what most people are in, right? Again, personal finance is personal. Personal finance is personal, y'all. That's right. So yes, the 401k match would be. I didn't even read that part. Talking. I'm sorry, I missed that because I was like, just wow. But anyway, yes, I need a session on metaverse. Okay, we'll talk about it. Okay. Okay, I see what's going on. Yeah, Miss Edith loves EYL. All right, what about air taxis? I read an article. They're coming. Guess what? There's levitating trains in Germany already. There's bullet trains in Japan already. A lot of the technology is there. It's just not being implemented here in the United States. So it's coming at some point. We will be like the Jetsons. I might be dating myself. All right, VGT. VGT, my favorite ETF. So VGT is a Vanguard. I want to say that's a Grand Vanguard growth ETF off the top of my head. And he puts money in weekly. Good stuff. Good stuff. Keep putting it in. Up, down, sideways. Dave Ramsey is still traumatized from the crash of 2008. He probably is, but guess what? We all should be traumatized from the crash of 2008 because it showed us what is indeed possible. Right? It showed us what's possible. And I know because a lot of the questions or a lot of the statements folks said was like, y'all were running around saying Bear Stearns would never go out of business. Lehman Brothers would never go out of business. I said that. In 2006, 2007, I said that. And then one was 2007, one was 2008. I had to go back and look. But one went out of business, then the other one went. Like one went in March and the other one went in like September. Because I remember the Fed kept having these weekend meetings, and they would come out with these new updates on Monday, right? So anything is possible. And a lot of times people get caught with their pants down because they think the worst will not happen. Happened in 29, happened in 87, right? It happened in 08. There have been crashes. There have been major crashes. If you have a good asset allocation, you should be able to survive. If you have a good asset allocation and a good emotional IQ, you should be able to survive. Because one of the things that killed people in 08 is they sold off and they went to cash. They sold off at the bottom. The crash started. There was a major fall in September and October of 08. And then in March 6, 2009, it rebounded. So it lasted for about 6 months, a major crash. But folks sold because they were nervous, not because they needed the money. So a lot of times, emotion, I tell people all the time, fear and greed drives the market. Fear and greed then dictate supply and demand. Again, fear and greed, people's emotions drive the market. And then that in turn drives supply and demand. All right, repeat says thanks. No problem. That's why I'm here. Reed Park, what's up, brother? How are you, man? Cabby333 says VOO, another Vanguard ETF. All right, Ms. Edith says, I ride for you too. Exclamation points. You know I'm here to represent the finance rebel. I appreciate you, Ms. Edith. I was just saying that I know you love EYL. There's nothing wrong with that. If you ever notice, I never have a problem saying other folks out there doing their thing, right? Never. I've talked about the Come Up Show. I've talked about Wall Street Trapper. I've talked about Ian, the Master Investor, EYL, By the Hood, right? There's a lot of folks. It's funny, I'll say this, right? I was watching an interview with Kevin Hart. Love Kevin Hart, Philly's own Kevin Hart. He was doing an interview on the Joe Rogan podcast. And on the Joe Rogan podcast, he said he's like the only person talking about financial literacy, financial education out here to the Black community. And I was like, man, where have you been? By the Hood's doing stuff. I'm doing stuff. The Ivy Investors doing stuff. Coach Carter is doing stuff. Real Estate with Tracy is doing stuff, right? Networking with Brandy is doing stuff. These are all folks. Now, yeah, none of us got the big cachets. You know, EYL and Ian and the Come Up Show is dope too. And the Trapper, they probably have the biggest cachet, but there's a lot of folks that are out here grinding. A lot of folks that are out here grinding. There's some other people I want to talk to, but their names are escaping me right now. But I can see their picture clearly in my face, in my head right now. But I can't think of their names. But there's a lot of us. There's Rachel. I just interviewed Rachel. Can't think of her last name. Rachel Hannibal, right? She's doing stuff. She's got a whole children's book. She's killing the game. What's the other sister's name? She's got a dope story. Ashley Fox. She's pretty dope too. Right? So again, there are a lot of us. There are a lot of us out here, right? So also, folks, just a quick reminder, disclaimer, none of this information is for buying and selling investments or securities. These are not recommendations to buy or sell. This show is for entertainment, educational purposes only. If you are thinking about buying or selling any investment, please seek the advice of an investment and or tax advisor. Remember, past performance is not an indicator of future results. Just because a stock did good yesterday or for the last year or the last 5 years does not mean that trend will continue on. All right. So let me get to a couple of these. All right. So Repeat with Pete says, what's the play? If you had the cash you needed and could lock down the next real estate play, single home or multifamily, I'm a bull on real estate since it's tangible and in my hands with options. I will say this. I'm more of a stock market person. Y'all notice, y'all been rocking with me. I used to manage a little under 50 doors with my dad, and have been around real estate all my life. Real estate takes work. But I will say this, in my city, in Philadelphia, and many other cities, I think I'm telling my clients not to sell. I'm telling them not to sell because the trend, people are coming. I mean, we're seeing some slowing in terms of mortgages and things like that, but the trend is up. And I don't think it goes down over the next 5, 10, 20 years. You might have some sectors and some parcels that go down. You know what they say, real estate is local, local, local. But I'm telling them not to sell. So if you can get something in a great area, I would hold on to it. You get more benefits tax-wise from holding something long-term, even if it's a flip, a year or more. You get better tax benefits that way. You get great tax benefits with real estate investment property, especially with depreciation, when that's allowing you to write off the cost of the building over the life of the asset. Not getting too technical with y'all, but let's say it's a residential building, you get to write it off for about 27 and a half years. Now, there's some other ways to change that around, but I don't want to bore y'all to death. But I think if you like real estate, stick with it. Now, I'm going to say this. I've run into a lot of real estate investors who are seasoned, but their taxes have not been well tended to. They don't have a great steward when it comes to their taxes. They don't have a tax steward. I see some folks who have 5, 10, 15, sometimes 20 properties have not depreciated the property. It's one of the best benefits of real estate, but they haven't done that. So I would just make sure you take the time, do proper planning, because I think that is the real play. I think tax planning, tax strategy is the real bag, because we give more of our money to Uncle Sam through these janky taxes than just about anything else. And so if you can protect more of what you made and redeploy it into other assets, that's the real win-win. Real win-win. All right. Sherman, 1906, how are you? Welcome, welcome, welcome. All right, Ms. Edith says, I saw 2 stocks for electric air taxis, BLDE and LILM. All right. I'm not going to look at them today, but we can definitely check those out. All right. And Ms. Edith also says, that's what I admire about you. You did express your respect for other Black people. Of course. I love Black people. Thinking about Jerry Maguire. How can you not love Black people? We've done everything dope on this planet. Right. So just keep that in mind, y'all. But I'll say this. Keep investing. Keep planning your taxes, right? Be strategic with your taxes and keep educating yourself, right? A fool and his money is quickly departed. Guess what? Everything ain't going to be the same. As Fat Joe says, yesterday's price is not today's price. But that matters when it's up and when it's down. We are going to have a market correction at some point. So don't get stuck sleeping on your feet. Don't get stuck on your feet. Oh, here we go. TB. What's up, TB? It says, what do you think about T-Mobile stock? T-Mobile, I'll say this. I'm not going to go into it today because we're towards the end of the broadcast. But do me a favor. If y'all are not on the text list, join the text list. All right, 215-974-0058. Text that to me, and we can do a whole review of T-Mobile. Same thing for you, Ms. Edith. We can do a whole review on that stock. Oops, where is it at? Here we go. BLDE and ILM. Again, nothing is here for investment advice. This is not investment advice, y'all. This show is for entertainment and educational purposes only. Okay. But again, keep educating yourselves and don't trust folks. There's so much trash on these socials. There's so much trash on the socials. There's so much bad information on the socials because, again, as I said in the beginning of the show, and I'll say it now as I'm saying it do, personal finance is personal. Just because somebody else did it does not mean you should do it or can do it. So keep that in mind, y'all. All right. So listen, the system is designed for us not to win. They want us to all be broke, dusted, and disgusted. Only way to do that, only way to change that is to rebel. Education is a form of rebelling. Real education, right? Education isn't just in the classroom, it's also in the world. You can educate yourself. You should never stop educating yourself. All right. The only way you can get out of the cycle, which the man has us trapped in, is to rebel, right? Take your money and buy some assets, own some stuff, do some things. Don't just buy things just for the sake of doing things. I often hear people talking about how we're all kind of trapped in this capitalistic society and in this white supremacist society, which is true to a certain extent. However, we don't have to buy into the stuff that they're pushing. We don't have to buy the foreigns and all the expensive nonsense. We can make our own clothes. And I know y'all probably gonna say I'm crazy, right? And I'm not saying we all have to do that. I'm just saying it's an alternative. You don't have to follow the script. You don't have to follow and do what everybody else is doing. You can rebel. Rebelling isn't a bad thing. Wealth creation is a form of rebellion. So anytime you're thinking about what you want to do in life, really get down and honest with yourself and say, what do I want? Not what does society want, not what does society think about me. Because again, like we said, they want you broke, dusted, and disgusted. They want you in jail oftentimes. They want you broke. They want you in debt. That's slavery. So the only way to do that, the only way to avoid that is rebel. And the first place you do that is with your mind. So keep educating yourselves, y'all. So we'll see you next time. I'll see you next week, 8 p.m. next week, next Wednesday, Wealthy Wednesdays. And I want to be starting to do some more smaller broadcasts throughout the week. You'll see some of these as we come forward, but I'll let y'all know. Be sure to check in with the text group 215-974-0058. And I'll see y'all all next time, next week. Later, y'all.